Hello and welcome. My name is Shruti Chopra. I'm a finance editor and the moderator of this hopefully very engaging webinar discussing the new era of trading technology. Now, when I talk to top executives of the finance sector, they tell me that digital transformations are a top priority in a post-pandemic world. But how do you achieve that when client demands have increased and budgets are more squeezed than ever? In this webinar today, we will discuss current trends in capital markets technology, right from the rise of the cloud to the automation revolution and more. Watch till the end to find out about the most exciting tech trends for 2024. Now, with that, I would now like to introduce our stellar panel. Desmond, can we start with you, please?
Yes, good afternoon, everybody. My name is Desmond Stockdale. I'm the founder and CEO of Phi Partners and delighted to be here today. Thank you.
Nick, can you go next?
Yeah, by all means. Well, firstly, thank you for inviting me to join this seminar. Yeah, my name's Nick O'Brien. I work for Amazon Web Services. I lead a program that we run around the world, which helps our organizations bring everything that we've got, which we think will be useful for customers and partners around the world of migration.
Doug, you're next.
Ruchi, thank you very much for the invite. It's a pleasure and honor to be here and look forward to discussing various cloud-related topics and how cloud can enable financial services businesses to become more competitive and much better at what they do. My name is Dr. Todorov. I'm a technology investor in deep tech companies, many of which run on the Amazon Web Services platform. But prior to that, I spent 6 years running a business called Heli Cloud. I was the founder and chief executive officer of the business, which was acquired by Software One in 2021. And prior to Heli Clouds, I was with Amazon Web Services. I joined AWS in the very early days of the business in 2011 as the principal architect for security and compliance in EMEA. And then I was the CTO for public sector in EMEA as well. So I've spent the last 12 years in clouds and plenty of interesting experiences on my plate that I'm looking forward to sharing with the wider forum.
Brilliant. So let's kickstart with the rise of the cloud. You know, everyone's doing it. It's a huge priority for the finance sector. You know, they have to deal with legacy applications, and you know the move can be quite tricky. So, Nick, can we start with you, and can you tell us some of the best use cases of the cloud adoption you've seen so far?
Yeah, certainly. I think we could have a podcast on this alone, actually. So, for me, I think particularly with the seminar, we're talking about launching Summit and the sort of like pioneering role that's going to play. I think I'm drawn to the transformational stories. They're the ones that I think are pioneers in different segments. They're the ones that I think are really fascinating to me. We are so fortunate that our customers love talking about some of the things and the projects they're doing. So we've got like a wealth of sort of stories to tell. I think first and foremost, sometimes change can be quite gradual. When you look back, you think, wow, look at Netflix and how that changes, how we watch consume television, or McDonald's and fast food, or even traveling with Airbnb. That took people to make pioneering decisions on AWS's platform. So, we're very indebted to, our work with those companies. There are some sort of lesser known brands as well. I think of sort of like Mobileye, which is doing sort of like automotive and adaptive control for cars, and people are posting nowadays being driven in a taxi, a robot taxi, and how different that feels. And again, that's like breaking new ground. And so I love those stories. There's one from a social perspective, Babylon Health, in terms of democratizing access to healthcare in developing countries. I think that's fabulous what they're doing. And again, like closer to home in terms of like the capital markets, and I sort of like this customer base. I think NASDAQ have been an amazing pioneer in terms of taking on the cloud, really sort of like, pushing the envelope of what they're doing. And we've also seen some great stories with Goldman Sachs. Data is the lifeblood of, the capital market industry, and, what they're doing about accelerating time to value with their Goldman Sachs financial cloud. Again, is another lovely example of like people sort of breaking new ground. So loads of fantastic stories.
That's brilliant. So can you tell us a bit about, the considerations related to security and compliance one should keep in mind when it comes to cloud adoption?
Yeah, absolutely. And I quite often, you'll probably find me saying that cloud is the most secure place where organizations' data can reside. Cloud is the best platform from a security compliance, resilience, and availability perspective for most of the businesses that I know of. And I remember the very early days of the cloud when we started in 2011. Pretty much every conversation was about what a cloud is secure and what a cloud is compliant. I think 12 years later, we are considerably past beyond that stage, and it is widely known that the AWS platform allows businesses to become compliant with ISO 27001. It's much easier to become compliant with PCI DSS on the AWS platform. Organizations that are looking to achieve high levels of compliance when it comes to personal data protection, as well as standards outside of GDPR and the UK Data Protection Act of 2018, such as HIPAA, for instance, find the AWS platform as the most secure and compliant one. And the reason for that is because compliance is really, and security and compliance are effectively a question of standardizing, templatizing, and automating, and achieving results, delivering results in a highly uniform fashion as well. And that's really what AWS do. If you look at the AWS platform, if you look at the more than 20 regions that they've got and multiple availability zones and more than 200 different cloud services, all of these services are implemented, managed in a fully automated fashion, and that allows for high templatization. It avoids human error. It leads to security by design, whereby AWS are in a position to define the high standards to which they want to deliver such services, and without any human intervention, ensure that these high standards are applied. I think it's also very important that today cloud has actually democratized access to services, and therefore it doesn't really matter whether you are NASA or whether you are the Home Office in the UK, or whether you are a startup in Shoreditch. Each and every of these organizations has access to exactly the same infrastructure and exactly the same services, and the level of compliance is the same for each and every of these organizations. So each and every startup benefits from the likes of NASA, for instance, pushing for much higher levels of security and compliance. And for AWS, because of the standard delivery model, that means that each and every organization is going to operate at such levels of security and compliance. I come from a much more conventional security and compliance background, and for my sins, I've spent a lot of time in data centers, and I understand the challenges of capital expenditure as well as OPEX when it comes to running and operating data centers, as well as various services and applications on top of that, very high standards. In the world of AWS, there is no questions of whether you want to use ISO 27001 security or compliance services. Each and every EC2 instance that you launch is already compliant with ISO 27001, PCI DSS, and another 30 security and compliance standards that can be applied to in the UK as well as around the world. And it's exactly the same bar, again, applied to each and every organization. Unprecedented security and compliance in the cloud.
Yeah, I think that's an interesting point that you raised there, Dob, around the taking NASA, accessing the same environment and the Home Office, as well as a startup in Shoreditch. And I think that this really is a changing of the times when you look at the big infrastructure services providers, the IBMs, the HPs, and many others just like them. This enormous capex investment required from them to actually build these large data centers. And then the name of the game is then onboarding, customers to be able to get, return on that investment. And I think that for services companies like us, with that availability of almost unlimited infrastructure at our fingertips, it means that new entrants, can quite quickly come in with there is obviously a capex investment, but it's relatively speaking much lower, both for customers to gain access to the infrastructure, as well as service providers being able to gain access to the infrastructure as a service back into those customers. So I think that's a really good example. And you've just that capex, for customers needing to make significant investments, in machines, and then the obsolescence that then comes with that. So that multi-year cycle of capex investment, with cloud services, is no longer an issue.
But tell us, can we what does it mean for legacy applications? Does cloud adoption work for every application, or is it,
life would be great if it did. So within capital markets, the legacy applications were not built for native cloud adoption. So there is, to be able to really get the benefits of the cloud technology from the likes of AWS, a lot of re-engineering needs to be done now to be able to get those benefits. But clearly, it's legacy apps running on infrastructure somewhere. So if it can run on infrastructure A, it can run on infrastructure B, whether that's AWS, Azure, or IBM. So, the question is, how beautiful do you want it to be, and how cost effective do you want it to be? And I think that the more legacy the applications, the less cloud compatible it will be. So it doesn't stop you doing the lift and shift, but it will mean there'll be some significant re-engineering to be able to get to be able to unlock the true benefits that are there on offer from these public cloud vendors.
Do you guys find that all finance firms see the point of it, considering it's a chunky investment in today's economy, and there are so many other factors pulling at these firms? So,
well, I liken it to a bit like why do people who have iPhones go out and buy a new iPhone, right? They have a phone that works. If I speak to my customers that are moving to the cloud, some of them are moving to the cloud because they've been told they have to, all the way through to ones that are more embracers of new technology, that want to understand how they can use cloud technology as a technology enabler for their business. So really moving cloud tech into the differentiated space where it becomes a P&L driver and a competitive advantage. So I think there's a whole full spectrum of reasons why customers are going to the cloud, from the I've been told to through to it's clearly the right thing to do.
Brilliant. And what can go wrong? What can go wrong with a lot can go wrong with.
Well, I think we can all answer that. Nick, do you want to have a go at that one first?
Yeah, it does splinter off in quite a few different directions. Well, first and foremost, I would say for a big change, which involves an organisation which has got a lot of stakeholders in a high-profile, particularly mission-critical environment, you've got to get everybody on board, and that means you need leadership from the top. And you really need to sort of bring teams together. And I think sometimes when people try and treat projects as a silo and don't bring all their stakeholders in, that's where things can go wrong. So I would say executive support and that ability to really sort of galvanize teams is a critical area. There's many others. I would say when you're moving from a capex model where you bought infrastructure once to something where you've got power on tap, you need to have new controls around governance. So you've got to be clear about the costs that you're going to incur on the cloud. And if you're finding your way with the cloud and you don't build that sort of governance layer in first, then you can get a little bit of shock. If you haven't had those controls, developers might be running up big systems, maybe running big tests, and you've got to keep an eye on that. So you've got to be really clear to have that sort of governance in place. So yeah, I won't take up, but I'm sure I'll pass it around for other examples as well.
Doug?
Yeah, absolutely agree with everything that Des and Nico already mentioned. But perhaps I'll also step back and say that cloud is a new paradigm when it comes to application, a new way of thinking when it comes to applications as well. Because in the cloud, effectively, cloud is the operating system for applications. If we look at the legacy world where many organizations still reside today, or a large part of their estates still reside today, you're going to find applications running on Windows, you're probably going to find applications running on Linux, and there is probably a wider stack of platforms that are used on top of these operating systems. In the world of clouds, you can build applications by providing the plumbing between a set of cloud-based services, platform as a service, and software as a service, as well as infrastructure as a service components. And therefore, a software developer, product developer in the cloud is in a position to select from more than 200 such building blocks and use high-level languages to describe the business logic, to outline the security and compliance guardrails they want to use, and effectively build a business application completely abstracting away of what the database is, what the underlying operating system is, what DLLs are going to use, web applications, and the rest of it. It's all abstracted away by the cloud platform. And furthermore, as I'm sure that many of our listeners are aware, there is also function as a service offerings such as Lambda, which allows someone that understands how to build cloud-native applications to orchestrate them by running distinct pieces of code, which allow them to effectively be invoked upon specific events occurring, and therefore the entire plumbing and the orchestration of the infrastructure doesn't even require a single server in order to orchestrate and run fairly complex business processes. And when you're in a position to create such distributed applications, which run in a highly distributed fashion and effectively orchestrate just platform as a service components, you are in a position to infinitely scale as well. And the scale of this infrastructure and applications on top can be minimal when an organization uses or requires minimal resources, such as in the initial stages of developing a platform on application, and then it can grow at later stages when there is more customers and much more demand for such services as well, therefore managing the costs in the longer run. But exactly the same infrastructure and applications are going to work even if we look at it in a much higher granularity, from a much shorter time perspective as well. You can have daily, weekly, monthly cycles where you use the application to a much higher degree, and then your usage patterns subside as well, and the infrastructure is going to scale to that effect as well. With that in mind, a well-designed and well-implemented cloud application or a system of application, an entire ecosystem of business applications, can be much more cost-efficient because of the infinite elasticity of the cloud. We are in a position to completely abandon capacity management, the conventional topic from conventional IT service management called capacity management, effectively adjust elastically to the demand from the users. Of course, one needs to invest to build to such level of elasticity and develop cloud-native application, and there is a capital expenditure in perhaps OpEx as well when it comes to achieving such a state of applications. But clearly that's possible in the cloud as well, and that's the evolution for many organizations as well. Moving to cloud is the operating system.
Great stuff. Sorry, go on.
I was just going to give an anecdotal reference point there to one of the drivers behind the adoption of cloud. Certainly from on the sell side in the large investment banks, and this was related to the full review of the trading book, otherwise known as FRTB. And if you took a linear view of what that meant from a computational perspective, it would mean between 3 and 4 additional data centers for the equity derivative businesses, which are exponentially more computationally demanding when it comes to running these calculations, which clearly the banks weren't prepared to do to go and invest and set up another 4 data centers. They knew that the ability on the cloud was there to be able to scale up and scale down. So leveraging the sort of the elastic compute purchasing from the cloud vendors. And I think that, for me, when I look at the customers that we were working with some 5-6 years ago, that were all looking at how we're going to not just align our front office pricing with our middle office pricing, so that we can meet the IMA standard and to be able to produce the standard approach, but what is the cost of actually doing this from an infrastructure perspective? And I think that forced, and Nick, I think you'll probably you'd have seen this, but I think it really sort of pushed a lot of banks, forced them into this, being more open to cloud adoption in that sort of front office pricing risk, in the crown jewels of that sort of domain-centric technology, which is sort of driving the differentiated side of the business, because it was cost prohibitive to be able to deliver a FRTB in the conventional sense.
Brilliant. I think it's a good point to move on to automation, something that everyone's talking about. The finance sector seems to be using it to overhaul, very people-heavy manual processes. But Dov, I suppose I'd like to start with you to talk about, how is the finance sector leveraging automation when it comes to, regulatory compliance?
Mm-hmm. I think you're going to get a response from me, which is typical for most geeks, and I'll make the suggestion that most financial services organizations today are actually very large IT companies. Most of the time, they do a lot more IT than they do finance. And cloud, of course, has been a platform that they can leverage for various different applications today. And if you look at on the retail side of the financial services market, if you look at retail banks, it is clear that core banking systems and pretty much everything from lending, for instance, and risk management applications have been the core of these organizations for many years, and they have benefited from information technologies. And most of the critical processes in these banks are clearly automated and run quite often on legacy applications. And all of these clearly are candidates for moving to the cloud, where with technologies such as artificial intelligence and specifically machine learning, such information can be taken to the next level. And the work that various banking executives actually do on a daily basis can be highly automated. And artificial intelligence, of course, can be used to take their labor and the outcomes of what they do to the next level, all the way from customer engagement through managing credit risk, for instance, and achieving much better customer results. And that's what they have been doing for many, many years. If we look at the investment banking side of the business, and if we focus, for instance, specifically on the trading side of that, it's obvious that high-frequency trading and various systems have existed for a very long time. And again, quite often these have been powered by linear algorithms, but in the last 10, 15 years, a lot of that has been largely non-linear, based on artificial intelligence and quite often deep learning types of solution as well, many of which, of course, exist in the cloud. We have also seen on the end-user computing side, whether you are part of whether you work for an investment bank or retail bank, robotic process automation and RPA solutions have been around again for many, many years, and helped with everything that cannot be automated on the back end in a machine-to-machine fashion to be automated on the front end, where user applications reside. And again, cloud has been a very significant enabler for that as well. And last but not least, as I admitted earlier, security and compliance are very close to my heart. But security and compliance are much easier in a cloud-based, fully automated environment. If we look at, for instance, legacy compliance and standards such as ISO 27001, or various COVID types of frameworks, or when it comes to PCI DSS, of course, when it comes to the payment side of businesses, in conventional fashion, These have been implemented in a compliant fashion and then audited and hopefully managed on an ongoing basis, abiding by compliance standards by people manually configuring systems, auditors coming with clipboards quite often and manually checking controls, especially when it comes to the backend infrastructure and the physical infrastructure in data centers as well, and conducting a point-in-time audits. And quite often, when the auditors leave, such organizations perhaps don't necessarily keep the same level of compliance, and then they go and prepare for the next audit. But what happens in between is by and large non-compliant and honestly sometimes not as secure as it needs to be type of environment. In the cloud, you can codify your compliance requirements. In the cloud, on the AWS platform, you can codify your PCI DSS, your SOC 2, your ISO 27001, your COBIT, your internal compliance framework, whatever it is. If you can, of course, distill a Basel II and MiFID into and MiFID II into such codification, you can, of course, look into much higher level financial services compliance, fully codified in the cloud as well. And many organizations do that too. And effectively, you are in a position to detect any deviation from the compliance that you have established through full automation in the cloud, get an alert, and perhaps get a team, let's say the security organization, to get involved and inspect the deviation from the compliance standard and resolve it. For many of the events in the cloud, shall I say, for all the events in the cloud, you can even prevent your system from going out of compliance. So you've got audit trail of everything that happened and events that caused you to go out of your compliance framework, as well as the remediative actions that you applied, as well as the lessons learned. So when your auditor comes, you can actually demonstrate in real time that you are compliant or not compliant, as well as you can demonstrate the history of being compliant and non-compliant for a period of time. And that's an unprecedented level of compliance that legacy systems and applications and legacy banking cannot achieve outside of a cloud-based environment. Therefore,
that sounds like a lot of work. So I guess Nick, I'd like to ask you. There are obviously challenges that come with automation. So if you could tell us about the threats and opportunities that automation brings.
Yeah, when I was thinking about automation in the context of capital markets, my first thoughts is that this is driven around market efficiency, so the need for automation. And as I think about, say, T+1, the introduction of T+1 in settlements in the US next year, that is driving organizations to be thinking carefully about, how do they reduce those cycles? And, it takes tasks, human tasks, which are, traditionally manual, and sort of finding automated solutions. That means, driving the adoption of standards better. It means like the implementation of interfaces. It puts the pressure on organizations to be able to remove those operational inefficiencies that exist in their business. So of course, but it is a big change, and when you're thinking about the scrutiny that these organizations are under from the regulator, then there's a degree of changing and adapting processes that they're familiar with and confident about into new processes. And of course that introduces concerns. It involves lots of stakeholders working together. So invariably, that change represents a risk, but you can see the positive benefits. You can see that, the reduction in counterparty risk, improvements in operational efficiency, market efficiency as well. So, I think, you can see that there are big prizes associated with introduction that automation, but of course they are projects and they need to be, sort of well thought through and implemented.
Brilliant. And then Des, tell us, in capital markets, what have you seen good investment cases when it comes to automation?
I think automation is in the context of capital markets, particularly around the enterprise vendor technologies like the Murex, the Summits, the Sophis, the Front Arenas. These are highly manual, non-automated applications, which means that any releases that you're doing, whether that be internal or external from the vendor dropping, an upgraded version into production are very expensive, take up a lot of time, and take up a lot of the key stakeholder times. So there's been almost like a death by 1,000 cuts, where you have small teams looking at automating their little bit, but actually, unless you address the whole bit, you don't really get the true benefits of automation. And part of that problem comes whereby your application support is reporting up into a different team to application change. Your infrastructure support reports up differently, and your infrastructure may be coming from a third-party vendor. So automation app to infra is very, very difficult to achieve, particularly in an institution of some size. Now, the other thing is that, of course, it can be done, but you tend to have at the end of the budget cycle a bum fight for money, right? So we've got 50 stakeholders all wanting to do these 50 things, and you can't be doing 50 times 50 things. You can do 50 times 20 things, and then you've got to decide what comes out. Anything related to automation tends to get dropped quite quickly, particularly when these automation projects to work properly, particularly on the application level, not talking about the infrastructure level now. These tend to be sort of multi-year initiatives, batch interfacing, integration testing. So they tend to either be slow burner projects at the back end, being done sort of off budget, or things that just never get the light of day. So I think that automation, is a real big opportunity within the capital markets space. We actually see far more automation in the applications where the customers have built them themselves. So they tend to get built with more automation in mind. So overnight build, overnight test style, but with these monolithic third-party vendor applications, it's just not there. Meaning that the TCO for these applications actually becomes quite significant, and find themselves being forced to do upgrades that they don't really want to do. They're not taking on new functionality, and takes up a lot of time and valuable resource.
Brilliant. I guess I'll move to the big outsourcing question now. There are different connotations, people use it for different things, but there's tell us, what are the pros and cons of outsourcing, and how has it changed over the years?
Well, if we go back to, so if we look at capital markets, which is where I've been operating for the last 28 years of my life, if I go back to the mid to late 90s, there was a joint venture between Deutsche Bank and HCL, which was called DSL, and there was a full commitment from Deutsche to collaborate and have their own offshore center in India to outsource functions within the capital markets domain. And despite all the best efforts from both parties, where you had a true commitment from the customer, what you effectively had was really very poor value for money coming back in. And there were a number of reasons for that. There's the time zone difference, there's a language difference, there's a cultural difference. And whilst it looked good on paper, the delivery back into the stakeholder was actually quite poor. And then you saw kind of an on-sourcing. So they realized that actually having complex, semi-complex tasks being done, from an offshore center in a different time zone with people with a very different culture isn't really working well for those complex, semi-complex tasks. So they then brought those back in. And what you've seen is a sort of a tug of war, trying to find where that sort of where that biting point is, and so you then see this sort of transitioning of resources being roles being offshore versus nearshore, versus onshore. I think that India's made some great headway over the last 20 years. You see large investment banks like Credit Suisse, like Barclays, Goldman Sachs, to name but a few, that have made a multi-decade commitment to that region. And now you start to see real value for money coming into those complex and semi-complex functions. So it arguably now works from a locational perspective. But I think there is some negative connotations around outsourcing in terms of losing control. The knowledge of your key systems are no longer with your people; they're with another supplier's people. But equally, there are a number of benefits as well. The ability to scale, very quickly. But I think then there's when does outsourcing become services provision? So outsourcing as a staff org scale play is one thing. Providing services back in with SLAs into more complex domain-centric spaces is another thing entirely.
Your point about the mood change is really interesting. The mood change when it comes to outsourcing. But Nick, I'd like to talk to you about that. What do you have to say about
Yeah, it's fascinating. I mean, I came from an outsourcing background, so when I joined AWS, I was quite keen to sort of just understand the extent to which that language was used, either by our partners or by our end customers, and their perspective of AWS as a public cloud. Would they sort of like adopt the same sort of language? And actually, very rarely do I hear that phrase, and it made me feel that maybe its major association was around labour. Touching on some of the points that Des referred to. I think and I really resonated to his point about there was a point in the IT industry where we talked about the commoditization of IT services. And I think that's where you start seeing this value drive, which is like, there are things that we are capable of doing where we can harness labour arbitrage and deliver services highly cost effectively. But I think, there was also an association about, if I've got a service provider, there may be like they're between me and the technology itself, and that introduces some sort of friction or some sort of, sort of constraints. And I think, what I saw particularly with our early adopters, when I joined and more recently as well, is that customers, really want to be controllers of their own destiny and have much closer access to the technology. And I think, what I've seen with the pivot with our partners, is that they're adopting that, and they're sort of like relishing the opportunity to upskill our end customers, sort of like develop those skills themselves as well. So yeah, I've seen sort of like a pivot in the sort of like the approach towards technology in the last few years, and where outsourcing came in.
Is there like a distinction between low cost outsourcing and managed services provision?
Not exclusively. I mean, I think Des talked as well about skills. The one thing that outsourcing does is it opens up a huge amount of skills to you as an organization. You might not have particularly cloud skills, which are still growing. You don't have access to the resources of some of these huge organizations. So there's massive benefits about working with those companies and mobilizing large teams of developers, for instance, to sort of work quickly on big priority projects. So no, I think there's absolutely a role there, around the actual sort of access to skills. I just think there's a sort of a mood change about the speed that customers need to change at, and they feel like they have more control of the design. And I think sort of Des touched on that as well about solution design. Then they can sort of pivot quicker into just more sort of digital projects.
Brilliant. And Dob, tell us, outsourcing comes with its own regulatory, security, compliance issues. You're often dealing with people from a completely different time zone, different country. How does one manage that?
Well, I'll probably just pile up on what Des and Nick said and build upon this foundation to answer the security and compliance question. And I absolutely agree with Nick and Des that there is probably some some bad connotations when it comes to and negative connotations when it comes to outsourcing as well. But the essence of outsourcing and the ethos of outsourcing is indeed to allow organizations to focus on their core business and really allow services organizations to take responsibility for what has been commoditized and what such organizations can deliver much more cost efficiently to much higher standards and do it at scale as well. And this is effectively the benefit and the ethos of outsourcing. Whether you do it at the infrastructure level, whether you do it at the applications level, whether we look at entire systems, whether we involve people in the outsourcing process as well, that's what outsourcing is designed to do. And it can do it well, and it can do it less well, as was the initial example that Des gave. But there is standards for that, and IT service management was invented to allow the business to interact with the IT organization and receive services from the IT organization in a highly standardized fashion. It defines these services, defines service level agreements and operating level agreements as well. So effectively, it creates a framework that a business can follow for the purposes of getting the most from their IT organization. And it's a standard interface between the business and its IT organization. If a mature business has such an IT service management based relationship with their IT organization, it should be relatively easy for them to establish an outsourcing relationship with a third party at any of the levels that we have discussed, and following exactly the same ITSM rules and interface to be able to consume services from an organization which may be external to them, and guarantee the levels of quality, cost, the time frames within which such services are going to be delivered. They can benefit from a service catalog as well. So there is plenty of benefits when it comes to the implementation of IT service management. And I would say even if an organization of financial services or otherwise is not using IT service management, whether they're outsourcing or not, they're already lagging behind. Implementing such a standard is a necessity, whether you outsourcing or not. And once you've implemented it, you'll be able to successfully outsource when you find such interfaces on the opposite side as well. In exactly the same fashion, when it comes to security and compliance, there is standards that the business normally is going to dictate. And these standards, I've mentioned, some of them include ISO 27001. They may include the likes of SEC 16, for instance, or AE 3402, SOC 2 and SOC 3 standards for organizations that operate in the States. There may be PCI DSS, personal data protection, Basel, MiFID II, various different standards can be applied, and the IT organization is typically just a custodian of data and services which actually belong to the business. And it is through such standards, again, that the business can manage the levels of security and compliance within an organization. And again, a mature organization that has such standards established is going to be agnostic as to whether they're receiving services to high security and compliance standards from within their own business, or whether these services or parts of these services are outsourced to an external organization. So I would always advocate the implementation of service management and security and compliance standards, regardless of outsourcing. And I think they're a necessity for successful outsourcing as well. I hope Des and Nick are going to agree with that.
Yeah, I was just going to add on to that. I think outsourcing for me is a sort of an umbrella term, within which there's everything from, the locational dimension, onshore outsourcing, nearshore outsourcing, offshore, far shore outsourcing. You've also got then how you then source, which can be through time and material, through managed capacity, through fixed price with SLAs, and then you've got you've then got whether or not what you're sourcing is domain centric. And then it's about the availability of those experts in relation to the technology in that domain. So as an example of an area that is very mature from an outsourcing offshore perspective would be something around payments. Okay, something that is in its infancy of outsourcing would be front office pricing and risk, as an example. Seen in the differentiated bucket by our customers, the technologists that are heavily domain centric, that are delivering technology that really drives their business. This historically has been the exclusive territory of employees, and more recently the territory of contractors to be able to deliver some of these new market conventions and these new regulations, as I mentioned with FRTB. I think that we're sort of seeing a shift from the mindset of the front office pricing and risk space to be more open to having services delivered from a non-on-site perspective by employees. And I think for me, certainly within Phi's business, the major single sea change catalyst for this was the COVID pandemic in 2020. When everybody in February 2020 was forced to remotely access those environments, the argument of you can't remotely access my environment was at that moment gone. And then, as you would expect with people that make money on arbitrage in the market, the resource arbitrage then came in, and it then sort of opened the floodgates for the umbrella term of outsourcing in its various different forms, and an acceptance move beyond the cognitive dissonance that you see in the front office pricing risk, where these people have to sit where I can see them alongside the trader, alongside the quants, alongside the sales staff. Well, nobody did that for 2 years. So it just was a paradigm shift in mentality, in technology for remote access. And I think we see a continuing shift towards more and more outsourcing style deals now being done in the market, and for the good of the market as well.
Brilliant. I think it's a good time to talk about barriers to implementation of everything we've talked about. Cloud is great, automation is great, but how easy it is to implement it, and what's stopping it. So I guess, Nick, I want to start with you. Are there regulatory hurdles holding up cloud adoption?
Yeah, I mean, ultimately, the regulators are there to protect our consumer and sort of business interests, and naturally, the things that they're stipulating is that this is an environment which has got fair and equal access to all. We all want stability in our financial markets, so we want to have reliability and availability of those systems. And there's like acronyms RPO, RTO that try and classify that. And there is an exceptionally high benchmark in the capital markets industry. Likewise, we don't want fraud happening in our businesses, and we want to be able to detect patterns of fraud, and we want to remove those bad actors from our markets. And if our personal data is involved, we want security. We want to feel confident, that we're protected as individuals as well. So, these are big requirements that face, a lot of thinking through, and changing your underlying infrastructure and way of delivering, needs people to be quite inspectful about the current processes they have and how they're going to replicate that. We touched on this a little bit earlier, and the sort of phrase, and how do sort of organizations in these markets operate, and how do they sort of like start adapting cloud technologies. And often they look at sort of like peripheral applications first. We've got like less business mission criticality, where there may be less numbers of users involved on those applications. And we have an expression in AWS which is there's no compression algorithm for experience. And really what we're saying is like, it takes time for people to build up those skills and also that levels of confidence. So, when it comes to taking on big challenges like running new infrastructure in a different sort of sort of format, then we see a lot of organizations just like taking their time, going through the steps, building more and more visibility on their project, taking more and more ambition as they go along. So that's what I'd say is that you have to, as an organization, be very mindful of the rate of change that you can adopt in your company. Right, and you're going to know about the projects that you've had in the past and where they've been successful or unsuccessful, and that's what we see about the approaches that customers adopt. We have a methodology, we call it the 7 R's. I won't go for everybody, but essentially it's about trying to sort of like look at different ways, different migration strategies that you can adopt. Now, you might not get the biggest benefits from some of the bigger changes, but you can certainly learn along the way and build a roadmap up where you can sort of like incrementally take your organization on that journey and sort of like be in a position where you can sort of like maybe sort of disconnect with some of the legacy aspects of your business, proprietary things that are holding you back. And then you can start building on that experience and sort of like putting new layers and doing more ambitious things. So hopefully that sort of like covers the barriers and like, how you can sort of like adopt a strategy to try and sort of mitigate them.
Yeah, absolutely. I mean, Dov, I think I want to talk to you about, security concerns and misplaced security concerns. That security is obviously a critical issue, but can that sometimes hold back innovation?
Mm-hmm. I think that's a very good question. And no, security should not be the blocker to innovation at all. And neither should be compliance. And of course, the next level of compliance when it comes to compliance with governance and industry regimes is regulatory compliance, which of course is imposed on many businesses. And I think from a cultural perspective, we've got two ends of the spectrum. The US quite often is very lightly regulated, if at all, and everything which is not prohibited and not regulated is quite often allowed. And that has, of course, allowed the US financial services industry and, of course, IT organizations helping in the wings to be very creative and be able to innovate at a much faster pace. But at the same time, a lot of the reasons for the financial downturns and sometimes for instance, trading mistakes that have taken place on public exchanges have happened in the States as well. And of course, that's the downside of not regulating very heavily. The European Union is on the opposite end of the spectrum, where the consumers actually look at the regulators and they want to see an industry regulated before they can trust that industry at all. So regulation is part of the adoption of new services, including financial services and supporting IT services as well. And that leads to much slower adoption, but at the same time to a much more steady growth and perhaps to fewer mistakes taking place. And of course, after the financial downturn back in 2008-9, Basel III and operational risk regulation was driven mostly by the European Union for the purposes, of course, of making sure that we don't see such failure, and it was widely adopted. So I think both ends of the spectrum meet in the middle and allow us to balance the fast adoption and the innovation, and at the same time innovating and growing at a pace which is sustainable and leads to fewer negative events. And I think the UK is probably in the middle when it comes to the cultural perception to regulation. We are perhaps not very regulation heavy, and we do take risks, but we do so in a very balanced fashion as well. So it's a cultural thing that we need to bear in mind. At the same time, if we look at the large investment banks, as well as many of the large retail banks, many of which are actually headquartered in the UK and listed on the London Stock Exchange, many of these organizations operate across 50, 100, 150 different jurisdictions, where they may be various different regulations when it comes to financial services, when it comes to personal data protection, when it comes to industry compliance. PCI DSS including is different in various different parts of the world as well, and the way this is achieved. Different labor laws as well, and IT inevitably will have implications and be influenced by labor laws as well. And with that in mind, I think the challenge is beyond cloud. It is a much wider regulatory set of standards around the world. But I think ironically, cloud is the platform, because cloud today, especially the AWS cloud platform, complies with more than 50 different compliance standards, some of which are regional, some of which are actually country-specific compliance standards as well. Allow such organizations to cherry-pick the specific building blocks from a compliance perspective that they want to use. And while they still use the same infrastructure and applications and plumbing between the applications, they can comply with different regimes in different parts of the world without necessarily understanding each and every of these regimes in detail and needing to invest specifically to achieve such compliance. So compliance is not necessarily a bad thing, but in the cloud, one can do a lot more when they need to comply internationally as well.
On the barriers to implementation, I'd like to know, how much does buy-in from top executives at the company matter, and do you see that as a problem? Because not everyone at that level understands the potential sometimes. So yeah, what do you think?
Yeah, so I think at the human level of the barrier to adopt outsourcing, you've got resistance, and should not be underestimated because they come in larger numbers. The resistance from the middle lower management. Outsourcing will ultimately affect them, and most, if not almost all of them, will be quite fearful of that. Some of them would lose their jobs or get reassigned to something else, and that needs to be managed very, very carefully, both as a supplier in, but also for the people making the decision down. There's also the role of cognitive dissonance, because when you outsource, you're not taking what they currently do and doing it exactly the same somewhere else. To Nick and Dob's points, it's transformational. You're moving to cloud not because it's infrastructure. You can change the way that you do things, make things far more efficient. So you've got to accept in part of that transformational journey that you're going to do things differently. A lot of people have done the same thing the same way for many years, and they either can't accept that things can be done differently, or are resistant to the fact that things will be done differently. Otherwise, it's just a lift and shift, whether that's of resource, of infrastructure, which is a not very efficient way of doing things. And then I think there is the operational risk. It's which executive is going to sign off on this, because it's not only their bonus that's affected, it's ultimately their career, not just in the bank, but elsewhere if they get it wrong.
Brilliant. So that brings me to a very, very important section of this webinar. This is why people are watching. So I want you guys to think really hard and careful of this. What is the one top tech trend do you think that will dominate 2024? So you need to mention the tech trend and explain very briefly why you chose it. Des, do you wanna kick off?
Well, I think cloud adoption is a significant tech trend that will continue to dominate budgets and dominate the architectural roadmaps. But I'm not going to talk about that. I'm just going to mention it. I think that undoubtedly there is a driver here, which is cost pressure, because we are in high inflation, high interest rate markets. This has affected the wallets of both buy and sell side, and so, but it hasn't changed the pace with which they want to deliver. So you're having to see more efficient ways, banks searching for more efficient ways, not just to find new margin, new revenue streams, but to be able to reduce the TCO of their existing businesses, either to meet the lowering of their revenues, but also to be able to free up investment to modernize their estate. Most organizations are very legacy in nature, and for them to modernize their estates, that they're going to need funding. And in today's climate, we're not seeing, we are not in a bull market. It would be remiss of me not to talk about this final point, which is the tectonic shift in the market from the ownership model to the consumption model. Today, capital market clients are owners. They own their relationship with the software vendor, or they own the software that they've built. They own the application support teams. They own the application change teams. They own the infrastructure operations teams. They own the infrastructure, or they own the relationship with the vendor, and they own the problem of how do they automate that and make that a CI/CD platform. I think, as we've seen with blockbusters and the way that we used to consume media, we were owners before we were consumers. And with the advent of Netflix and other online providers, we now have completely shifted to consumption. So I think that we'll see a growing trend in the market, moving capital market buy and sell side customers moving away from classic ownership model into consumption model.
Brilliant. And Nick, what are you going to put your money on?
Well, what's reverberating around our business at the moment is probably no surprise to people that generative AI. We're involved in sort of supporting a lot of our partners in terms of how they do business development, and without a doubt, it's the topic that our customers want to talk about, and they want to explore ways in which they can embed that into their applications and be more efficient in their businesses. We've released some products, right? Code Whisperer is one where we kind of support the developers, and there's millions of developers, and they can then have access to tools which sort of complement their writing of code, but giving suggestions and recommendations around security or efficiency or classes that they can rely upon and use. So I think what companies will be doing, as a trend, is a lot of exploration around how they can find ways to sort of like make marginal gains in their business by helping the people in their companies. And in like highly regulated industries, that's going to be a challenge. Who takes responsibility for things? There's a lot of issues there to sort of navigate. But I think we'll see that, a lot of interest in that continuing into 2024.
Brilliant. And Dob, what excites you for 2024?
And I agree with Nick here. Generative AI has really come with a big splash, and we've seen everyone interested in it suddenly, which is what happened about a year ago. But generative AI is so overhyped at the moment that I think that everyone sees it as a solution to every problem in the world, including world peace. And given the current geopolitical environment, we all know that that's unrealistic. And artificial intelligence is, of course, a very significant trend, and we are going to continue to see more and more on the artificial intelligence front. But we are only going to be successful in adopting it and converting it into successful business if we can feed it with quality data. So 2024 is going to be the time of reckoning, and businesses are going to realize that they need to manage their data much better in order to be in a position to leverage artificial intelligence and many of the other capabilities that cloud offers to these businesses and will continue to offer going forward. And the natural habitat for data is actually cloud. Longer the days when data lives in SANs, in data centers. Organizations' day-to-day lives in Salesforce, in Splunk, in ServiceNow, in Office 365, in SharePoint, lives on Amazon Web Services, S3 and Glacier, and various other storage solutions as well. Cloud is the natural habitat, and proper management of data is going to be the major trend in 2024.
Brilliant. Thank you so much. I learned a lot about the new era of trading technology, and I hope you enjoy this conversation, and I hope the viewers will too. Thank you so much again, Des, Nick, and Doug, for your time.
Thank you, Shruti.
Welcome.
Thanks very much, Shruti.
Yeah, thanks a lot.